So here is the Atlas line right here, and here is the entry all the way up here, okay, for the euro. And the same thing for the E-mini. Actually, it doesn't. It's not too different. Here is the Atlas line here, and here is the entry for the E-mini, and here's the entry for. Let me see. Here is actually the entry for this one here. I'm sorry, this one here is the entry for the euro. Okay. So what do I see? How do I understand this, or what am I doing? Right? The questions you guys may be asking yourselves. What's really happening here? Well, the best entries when we enter, whether it be a 5-minute chart or 1-minute chart or 15-minute chart for that matter, the best entries are the ones that allow me to enter long or short as close as possible to the Atlas line, right over here. This has moved really far away from it. And even though this trade may work out, okay, probably about break even, this one's already in positive territory. Okay, this one's already in good shape. I still think that we are really far away here. Okay, it's more of a higher risk trade. So those of you who have the Atlas line know that during the training, I include training with it, with all the software and all the courses, right? We do a recorded training session. I say to you, be very careful not to enter in an overexposed or overbought or oversold. And I'm not using stochastics at all to tell me any of that. I'm just really making this as simple as possible. I'm saying to you, if we're going to enter long or short, let's enter as soon as it crosses above the Atlas line or as soon as it closes below the Atlas line. A situation like this where the Atlas line begins to plot and gives me a long trade here, I really have to say, is it worth taking the trade because we're so high above it? Okay, so just as a side note here, I always say be very cautious with taking trades where if you have the Atlas line, if they're so far away from the Atlas line where you don't have, the idea is to get in here and as it goes up, right? I mean, that's the entire idea. Or get in here as it goes down. Okay, so just as a side note, I want to fully explain to you guys the rationale here behind the Atlas line, why we're taking the trade. The direction that we always take is based off of price being above the Atlas line, being below the Atlas line. Joe got 6 ticks. All right, Joe, very good. On the E-mini. And this is 22, 32, 42, 42. You're talking about over 20 ticks here from the Atlas line. I think this is a higher risk trade. This here is 45, about 7 points. It's also 14 ticks. I'm sorry, 46. 6 times 4 is 24. You're looking at 24, 25 ticks above. It's a ways. I have to say it is a ways. All right. So even though this trade worked out, just caution here a little bit. If you want to take a look at trading overnight, right? Let me just show you here overnight and pre-market as well. You look at entering the market. You see as let me just expand this here. You see, as soon as it closed below the Atlas line, we have an entry, or we have a signal to enter, I should say. And so those are, in my opinion, the best trades, because look at the route that it has to take. Okay. How do I manage the trade? How do I configure profits? How do I configure stops? How do I look at this once I'm in the trade? One of the tools that I use, and I don't know why more traders don't use this tool. I think it's an excellent tool. I really do. It's the ATR. and you've probably seen some of my videos here where I mention the ATR a few times. And for those of you who don't know how the ATR works or what the ATR is, maybe I'll ask here in the room, who has seen my videos on how I use the ATR, and what do you think? And if you haven't, I'll be happy to put in here a couple of links here, and here's the TradeStation. Here's the TradeStation version of exactly what you're seeing. Same thing here, TradeStation or E-mini, right? No real difference here. All right, good guys. Okay. So, in reality, those of you who are using it, fantastic. I can't trade, unfortunately, without knowing what the current market conditions are, right? I have to know, are we trading in a slow environment? Are we trading in a fast environment, right? I can't always assume that the market's going to run or jump, right, to a specific profit target. I can only take what's shown to me based off of price. Hence, if the market's slow, show me. Put an ATR on, like I'm going to do right now. And any charting platform has the ATR, so you may not be using Ninja. If you are, it's ATR, average true range. If you're using TradeStation or eSignal, they all have the ATR. Okay. So the ATR is this line right here, and what are we doing? What's happening? What's the action right now? Well, right now I can assume 2 points, 2.5 points, 2.25 points, right? This is what I see to tell me right now if I take a trade what I can expect. So if I can expect based on what has just happened, and I use a parameter of 4 or 5, just the last 4 or 5 bars, the most recent market activity, right? I can say with a pretty high probability that that market will move at least 2.5 points or 2.25 points. Okay. Now, I'm using a period of 4, but you can use a period of 4 or 5, the last 4 or 5 bars, Brian. Okay. Yes, Abayomi. It will work on free or the demo version. The Atlas line does work on the free or demo version of the NinjaTrader. Yeah. I agree, Alan. You're welcome, Abayomi. I agree. Always being more conservative by far is a better solution, because it could absolutely hit your 2 points or 2.25 points or 2.5 points and hit it and hit it and hit it, and you don't get filled. And unfortunately, that's trading. When it doesn't go through your price, or the number of contracts that are traded aren't enough to cover everyone who wants that price. So being a tick more conservative, I agree, is the way to go. I wouldn't go more than a tick more conservative, only because it's got to be worth our while to make this profit. So I'm not really going to cut this in half. I'm a tick conservative. I think it's a great idea. Okay. 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 Now, just looking at some Skypes here that are coming in. Sorry. Okay. So now, let me explain to you how I manage these trades, why I do what I do with stops, and so forth. This entry here is actually very simple. When I have 2 consecutive closings above or below the Atlas line, this triggers setup and an entry at the closing price of the second candle. So this here, 1352, is my entry. As soon as this occurs, I look down. And I say to myself, what's happening? What is the current activity doing? And you can see this number is 1.82. So using a 1.82 on the E-mini, that's roughly, if you round down, 7 ticks, right? That's what I can expect the market at least will do if I enter here. Now again, I have to say, because we're so far away from the Atlas line, I would consider this a higher risk trade. The best entries again are definitely a situation like this or a situation like this, where as soon as it crosses, we got an entry. Okay, but 1352, based on the current market conditions, should go up at least 7 ticks. So what's 1352 plus 7 ticks? Well, that would be 1353.75. That's what I can expect the market to trade to. It could absolutely continue higher, and you can use any method you want to trail a stop, multiple contracts, take half off at the ATR, and then ride the other. Sure, there's a million and one things that you can do, no doubt about it. But for me, this is what I expect. Not 10 points. I have to keep my expectations in check, right? So as I move forward, you can see that the market hit the 7 ticks, and from that point went up a little bit higher, but now is probably right at the 7 ticks anyway. So these are the reasons why I look at the ATR. Tell me what my expectations are, so I don't think that this is going to go up because I think it's going to go up, or because somebody on TV thinks it's going to go up. All right. All right, Keith, very good. All right, so that's how I use the ATR and why I use the ATR with my trading. Now let's talk a little bit about stops. Stops are threefold. Now the reason why I use 3 stops, because I don't think a stop is a one-stop shopping. In the training that I do, and mentorship, and all this other stuff that I do, I don't think that having a hard stop and saying to myself, let's see the market hit my stop, and let that be the only way to manage the trade. I think that stops have to be adaptive, okay? A stop has to be adaptive, because if the trade takes forever, something's wrong. It's not going to my profit target. I have to have an understanding of that. If the market proves to me that it's time to get out of the trade with some type of proof, that's also something that I want to take advantage of. So you have to use stops that are adaptive. And I don't think just having one stop and just holding it forever is the way to go. The 3 stops that I use in my trading are a time-based stop, where I give the market a certain amount of time for it to hit the profit target, which I already know is 7 ticks in this example. A prove it stop, which is a close on the opposite side of the Atlas line. So if it closes below the Atlas line, that's a prove it stop. And in the Atlas line, this is a prove it stop. In the other methods, the prove it stop is a little bit different with other proof. And a catastrophic stop. And a catastrophic stop is based off the ATR. The catastrophic stop tells me that I don't have a news event, a scheduled news event, to be wary of, but still something could happen. If you've heard the news of JP Morgan Chase, where they lost $20 billion, and I haven't looked at the stock this morning, but it was down about 20% yesterday after the news. Those are events that are really out of our control, where something hits the news, or an earthquake, or some type of terrorist attack somewhere in the world where the market's going to react on that. It's something that we don't know is going to happen, but so you have to have some type of catastrophic stop. And I base that off the ATR. And the catastrophic stop is usually double the ATR when the market is more than 8 ticks. And if it's less than 8 ticks, or 2 points here on the E-mini, then I don't need such a large catastrophic stop. I double the ATR when it's below. I have a 20 tick maximum or 5-point maximum stop when it's above 2 points. So use the ATR as a gauge to when the market is slow, and I never risk more than 20 ticks on a trade. Now, let's get back to the ATR here on a, let's get back to the point here of the ATR. When we have conditions that are very, very slow, we shouldn't be trading. I put a line here and I say, if the average true range falls below 1, meaning the last 4 or 5 candles were unable to make more than 4 ticks, you know it's really slow. You're going to get dojis, you're going to get red, green, whipsaw channeling. It's not worth trading. So, in my opinion, whenever you see the market drop below 1, it's telling me that you can barely make 1 point. This is where we stop trading. Conversely, if the ATR is very volatile, 5 or above, meaning 20 ticks, each candle averaged out, the last 4 or 5 bars makes more than 20 ticks, by all means, stay out of the market because it is chaotic and volatile. Usually you see this during news events. So there is an extreme, either too volatile or too slow, that we shouldn't be trading. Market usually 99% of the time stays within these values. And I think lately it's been very slow, under 1 in the latter part of the day, 1 or under. So whenever you see the market being that slow, it's not worth trading. Just stay out of it. The risk isn't worth it because there's nothing there for us. Okay? Let me see here. Questions. Dan has a question here. Is your first trade always 2 bars after the outline plots? That's correct. Yes, Dan. And Dan, just to follow up on that, any trade is always based off the initial double bar long trade. Here, I'll show you here. The double bar trade double closes because it gives you 3 or 4 entries here, the Atlas line. The trade double closes is always 2 consecutive closes above or below the Atlas line. Dan. Okay? To answer your question there. All right? Keith says here, do you always stick with your targets although the market looks like it's going in your favor beyond the target? Dan, what you just said here, and I'm just going to put it here. I'm sorry, not Dan, Keith. I'm going to just, I don't know if I can I copy that here? This, what Keith just said here, market looks like. That is a big problem. I have no, we may think, or it may look like, or, could be, and all this other kind of, hoping, is, it's hard. You can't really dictate that kind of thinking and be consecutive, or not consecutive, consistent, right? So this here, as your question mentioned, market looks like. Man, sometimes it looks like it's going to go up and it doesn't. Sometimes it looks like it's going to go up and it does, right? Sometimes it looks like it's going to do something, it does nothing. So the only thing that I could say, Keith, in regards to your question, do you always stick with your targets, although the market looks like it's going in your favor beyond the markets, is to take it an approach a little bit different, where let's say instead of trading one contract, you trade 2 contracts. And if you trade 2 contracts, take on 1 times the ATR, your half of your position or one contract, and then the second one, as if you could play with it and you can say, okay, let's let's let this thing ride because it looks like. I think that would be a better management structure. But if you just are trading one contract and it hits your profit target, at that point it did what I expect. And anything above that is hope, right? You're hoping that it's going to go higher and continue. Okay? Keith? Okay. No, Dan, it's not repeated. It's forwarded. I get it, and it's forwarded. Okay, Dan? All right. So first, let's talk about what we see right here. Okay. Here is the Atlas line question. Abayami asks is, do I help with it install? I do. I have a support team that does remote logins, that answers questions. I answer all the technical questions. So yes, we do. If you need help installing the Atlas line, I do have someone who can help you with that. Remotely logs in and does it for you as well. The trade double closes here is set to true. This is what you see. Trade bounces, or trades that bounce off the Atlas line. When the Atlas line acts as support and resistance, you get orders. Following, we have pullback, trade pullbacks, and trade strength trades. Okay, these are the next two. So I'm going to just put this out of the way here. You see this S, S, and S. This is considered a strength trade. And the strength trade, based off the Atlas line, is telling me that price is above the Atlas line. It's showing me strength. I'm long. That's how that works. Now, with these strength trades and pullback trades, I used to teach them manually. The original Atlas line, I say, okay, these are additional trades. This is how price action works. But now I've updated the Atlas line to include these strength trades and pullback trades. And so you're going to see S's and P's throughout the charts telling you that this is a strength trade to go long, this is a pullback trade to go long, and so forth. I only like to take a smaller profit here on both strength and pullback trades. So strength trade profit target is typically 1 point or 4 ticks. If the market's this volatile here, we're looking at, let me see what it is. It's roughly 3 points. Go for a little bit more, maybe 1.5 point, 1.25. It's fine. But I don't want to take the exact ATR based on a strength trade because it's already moved somewhat. Okay. Okay, very good. Dom? Yes, I do, Alan. If I have a preference regard to the strength or pullbacks. The strength trade, to me, sometimes you get in here. Remember, the stop is just under here where it pivoted below, right? Because it came down and it went up. That's how the strength trade is calculated. And so sometimes the strength trade gets me long higher or further away compared to what my stop is. So my preference is a pullback trade. Alan. Remember the filter as well, Alan, on the strength and pullback trades. Okay. No problem, Alan. Dom, can you explain how 7 ticks was calculated with the ATR? Absolutely. Okay, so let's take a look at what the euro is doing first. This is the euro as well. Okay, and here's a pullback trade just to show you the pullback trade here on the euro currency. Okay. Yes, I can. Dom, you see the ATR here? This line here that's moving. This is telling me that the last 4 bars have the average range of the last 4 bars, that's what the ATR is, whatever value you put it to, is this number, okay? So at the time that the trade occurred, 1352, close of this candle, the ATR was 1.82. 1.82, the US indices are calculated in points, not ticks. Currencies are calculated in ticks. So 1.82, because the E-mini is quarter point increments, when you round down, you get 1.75. 1.75 is equal to 7 ticks. Okay. So I can assume, based on the last 4 or 5 bars, that 7 ticks of average is what the market will go to moving forward. Dom, did I explain that okay for you? Okay, you're welcome, Dom. Yes, Steve. Well, the pullback in strength trades, as long as we're in a trend, will just continue to fire off. And that answer to John too. Will the strength and pullback trade generate multiple times? Yes, they will just keep on generating as long as the trend is good. You're welcome. Okay. Let's take a look here. Questions. So Steve, do I consider the first strength or pullback trade to be the best or more reliable? Could be. As long as this trend continues to go higher and higher and higher, you're going to get them. So it's not as if this is the most reliable or not. It really depends on the strength of the trend to continue to push up or down. John, will the strength of pullback trade generate multiple times? Yes, it will generate multiple times going in the same direction. Here, let me show you an example of that. Let's take a look at here is a strength trade. This is yesterday. And you see here, double bar short strength, pullback, pullback, pullback. Yep. Go to day before that. Here, the 9th, you have strength, strength, pullback, strength, pullback. Right? And so forth and so forth. Okay? See, strength, 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 pullback short, pullback short. Okay? All right, John? Okay, next question I have here is, Dan, notice the S trade that came up on the ES didn't drop below closing candle and enable a fill. I'm sitting at 1365 waiting for market to come back down or fill it. Is this wise or should I just pass on the trade? If it's already gone to your profit target, Dan, and it's already made your 1 point of profit, I would pass on it because it's already made the move. So I would not, if you missed the entry and didn't get filled and it takes off on you, I wouldn't hold it and wait for it to come back because now you're waiting for a second chance type of thing. So I would definitely let it go. It does not change, Ed. It's constant. Does not change. Once it's calculated, remains the same. Is trading the night E-mini more difficult? Yes. It's more dangerous because you don't have the same traders. It's slower. You really only have the European, the London Open, that starts at about 3 o'clock Eastern Standard, 8 o'clock London time. So yes, it is more difficult to trade, Keith, overnight, without a doubt, on the E-mini. If you're looking at currencies, currencies are pushed pretty strongly by the European traders, the Australian traders, the Asian traders, where we consider overnight. So that would be okay to trade overnight, but the E-mini, I think, is harder to trade overnight. Yes, it does. Gold and Russell. Here, let me go to a Russell chart. Russell, it works with any market that has 24 hours. Okay, here's the Ruffle, the June Russell, and here is the long here. And here is the strength trade on the Russell. This is overnight on the Russell. And let's take a look at yesterday. Yesterday on the Russell, some shorts. Gold, let's take a look at gold. I haven't looked at gold today, so let's take a look at what it looks like. All right, here's gold. Gold had a short trade today that did not work, and then you had a long trade here that did work. Okay, and this is a short trade. So that's gold. You're welcome, Dom. Crude oil. Yep. Let me show you Patel, Mr. Patel. Crude oil is, let's take a look at what crude is doing today. June, I think we're in June, crude oil, right? Very similar to gold. So here's the crude oil. Long and strength trade. This here did not work. Remember, a prove it stop is a close, so you enter here and you're out of the trade right in the next bar, a prove it stop. Okay, that's how you manage your stops based off of the Atlas line on crude oil. Alan says here, off the wall question, can an institutional trader tell if an E-mini order 10 contracts was placed by a retail trader or another institutional trader, or are they privy to order info that we are not? You know, you can tell, Alan, on certain platforms, level 2s, where the orders are coming from. I think what's most important is what they look at is where you have a group of orders that are all bunched up at and usually it's at an even number. That's a sign to tell you that those are not institutional traders. They are average Joes, the retail trader. That, I think, is much more telling, and that's what they look for. Okay, Alan. The Atlas line can be configured, Ed, to start at any time. So, for example, the times that I recommend, I'll show you here how this works, Ed. The time that I recommend the market open at 9:30. If you wanted to trade the open, you can put it at 9 o'clock. But I think the 9:30 is much stronger, and it takes a couple of minutes for it to calculate. So here is a 9 o'clock. So if you wanted to catch the Atlas line as the 9:30 market opened, you can put it for 9 o'clock. I personally like the 9:30 calculation over the 9 o'clock because you see here there was a short first, which you got out of the trade, and then it started off the move. So I find that the 9:30 plot of the Atlas line is much more accurate than the 9 o'clock. And this is the 9 o'clock what you're seeing. So you can change it. Change it. Okay? Yeah, it's easy. You would just change the, for example, the market open. Instead of you starting the market open at 9:30, you would start at 9 o'clock. And you can turn on or off any of these signals. Okay. Okay, there was a coupon code for those of you who are asking about purchasing the Atlas line. I'll just give it that to you again. It's Mother's Day. Small discount. Nothing big, 10% off. If you're interested in getting it, you can. Mother's Day is coming up here this weekend. I think it's in the email as well, Mother's Day, is the coupon code for 10% off. It's a normal, Carl, it's a normal ATR. Normal ATR. It can be changed to anything. So, for example, if you lived in California and or GMT time, I'm not sure where that is, but if you lived in California, it's PST. You would change that to 6:30 because that's when the E-mini starts in Pacific Standard Time. Okay, but since I live in Florida, the Eastern Standard Time, my local computer clock is set to currently EST 9:30 is what I use. So this is really, and I go over all of these settings in the training, making sure that you're all set. Okay, London time would be 14:30, right? So if you live in London, it's 14:30. That's when the E-mini opens for you. If you live in Australia, I have a lot of Australian clients. It would be, depending on where you are in Australia, 23:30. So you really configure it to your time zone. That's how it works. Okay. Christina says, do you stand aside for imminent news? Yes, Christina. If we have a 10 o'clock news event and there's a trade for the Atlas line just before 10 o'clock, then you can go ahead and take the trade, but as soon as 10 o'clock occurs, if you weren't able to make any profit leading up to that news event, I would definitely pull out, because even though you may be right, let's say, let me go here into the future. Let's say that the Atlas line begins to plot and a news event occurs. You enter, and unbeknownst to you, the market may go up or down 4 or 5 points before it settles and closes. And so that's why I don't want to be stuck in that kind of a chaotic notion. I want to be, if I'm going to get in, I'll get in before the news event happens. I'll get out right as it's happening, or just a couple of seconds or a minute before it happens. If I wasn't able to make any profit out of it, I'll wait until this news event is completely finished. I'll wait one additional candle for the market to get back to normal, which is a candle that is reflective of normal activity, just like we had prior to the news event, and then I can continue the trade. But I don't want to get stuck in this kind of up and down motion, because it's dangerous, right? During a news event, market can go up or down very easily 8, 9 points, and I'll try to avoid that. Gilbert says here, Carl, yes, the ATR is normal ATR. Dom says here, is the chart always set at 5 minutes? 5 minutes is what I like to use. You can use any time frame. You can use 1 minute here. I'll show you 1 minute. This is 1 minute. That's a 1 minute chart. 1 minute, I think is a little too fast, because the ATR is only a point. It's not too bad, but I'm not looking to just take a point. You can if you want to scalp it, but it's not my preference. The 5 minute, in my opinion, is much better. Okay. Okay. Sorry, here a couple questions here coming in on Skype. All right. You're welcome, Christina. There's no trading room. The value is start time ATR. Carl, I use 4 for the ATR. Value of 4. Here, 4 or 5 works the best. Carl? I think so. Alan, of course. Of course I do. Carl, I use a value of 4 on the ATR. ATR value of 4. Okay. Okay. You good with that, Carl? Carl Williams? The ATR that I'm using down here is average true range setting of 4. You can right click, you can set it as a default. Any settings in NinjaTrader, you can just right click and set as a default once you've changed them. Okay? You're welcome, Carl. Keith says here, obvious question, but which are the most primary markets you like in addition to the E-mini? I like markets that are consistent and not too volatile, and that are traded in the mainstream. So if you look at the Russell, if you look at the E-mini, if you look at the soybean market, if you look at the Australian dollar, the Swiss franc, the euro, okay, yeah, okay, the euro, of course, but markets that aren't like the Japanese yen. The Japanese yen is a very difficult market to trade because there's a lot of gaps, there's a more whipsaw, it's chaotic in a sense. It's not very easy to trade, and so I stay away from the Japanese yen. I like the Australian dollar, the Aussie dollar, right? I like the Swiss franc. I like the Canadian dollar, CD, or the 6C on NinjaTrader. Gold and crude, I tend to shy away from. I think that they are, in my opinion, I think that the crude and the gold, at a moment's notice, they could flip on you, and it could be damaging. So I stay away from markets that are unpredictable. I like markets that are calm and controlled. The FTSE 100, here, I'll write this down here. FTSE 100, I think, is an excellent market. T-notes over the T-bonds I like. T-notes, Australian dollar, and Canadian dollar, so forth, okay? But I really try to stick, obviously I can't look at every single market all the time and have all these charts up and trade like a nut, but I try to stick to a few, usually one at a time, is where you can concentrate on what you're doing. If it's not working, then you can jump to another one, okay? I try to show you a combination here because not everybody trades the E-mini. It's been slow. Some traders trade the Russell, some traders trade the currencies like the euro. I'll put on the Australian dollar here. I don't know what it looks like, but it should be similar to the euro. Okay, so there's the Australian dollar right there. Canadian dollar. Let's take a look at the Canadian dollar. 6C. 6C is Canadian dollar. So here's the Canadian dollar, a little bit different here. Right? Let me see if I have this set properly. Canadian dollar, 930. Yep. So here is the Canadian dollar. Gave you a short this morning with this Atlas line looking like that. So this would be 1-2 to go short. And here we are. Really nothing happening, just kind of tailoring out. And here's the FTSE. The Z contract is the FTSE. Okay. And so really the Atlas line can work on any market that's 24 hours. Obviously, I wouldn't want to trade rice or the Mexican peso. I think they are not the proper markets to be trading. But there are opportunities. There are plenty of markets that offer opportunities. All right, I want to thank you guys. Some of you guys are in the mentorship program. Fantastic. Next class, second class is Monday. Anyone who wants to join up, send me an email. I'll be happy to have you guys join the mentorship program with me, 8 weeks with me. Those of you who want the Atlas line, please ask me any questions you may want. The mentorship, it's not just the Atlas line. There's so much more to what I teach with filtering. I mean, it's really a complete package. So the Atlas line as a tool gives entries. People use it with their own trading methods and their own methodologies, but really the mentorship is a complete package. It teaches you how to filter and do other things that based on manipulation that you can use in conjunction with the Atlas line by filtering out some trades. Absolutely. All right, email me on that, Steve. I'll give you more info on that. Become very dependent by come to Atlas line. Well, you're going to know why you're going long and why you're going short. So it's definite added benefit to know the direction of the trading that you're taking instead of looking at something else. So I would say there's possibility you're going to be dependent on it. Sure, Kate. All right, guys. I have a class here starting at 11 o'clock. Just want to prepare for it. But if you have any additional questions, feel free to email me at support@daytradetowin.com. Hopefully I've shown you guys something that will benefit you in your trading. And I will talk to everyone soon. Next week I'll try to do another webinar. Maybe teach you something new, something different. Have a great weekend. Stay safe. Bye-bye now. Thanks, guys.